Welcome to Factful Finance. Today, we're diving deep into an often misunderstood corner of the finance world: equity release agents. Now imagine this. You've worked hard your entire life, built up your home as a nest egg, and now as a retiree, you're looking to unlock some of that wealth for a comfortable future. Sounds simple enough, right? But here's the kicker. Equity release could be one of the riskiest financial decisions you ever make. And while the idea sounds great on paper, there's a hidden side to the story that you need to understand, especially when it comes to how these agents actually make their money. So how do equity release agents really make their money, and what's in it for them? Let's break it down step by step. Equity release agents are paid through commissions. And while it sounds straightforward, what happens behind the scenes is far more complex and potentially costly for you, the homeowner. Most agents work on behalf of large financial institutions or equity release providers. And here's the deal. The bigger the loan they can sell you, the more they stand to gain. But the stakes, they're huge. In fact, when it comes to commission, we're talking about a percentage of the loan, typically anywhere between 1% and 7%. On a £100,000 equity release loan, that could mean anywhere from £1,000 to £7,000 in commission for the agent. But that's just the start. Some agents, especially those working with larger firms, can earn bonuses tied to the volume of business they bring in, which encourages them to push higher value loans, often with terms that are far from ideal for you, the borrower. Let's take a real-world example. Meet Henry. Henry's 68 years old, owns a house worth £300,000 and has no immediate heirs. He's looking for a way to supplement his pension. He's approached by an equity release agent who presents a £100,000 loan, explaining that Henry will never need to pay it back during his lifetime. Sounds great at first, but here's the catch. The agent stands to earn a commission of about £4,000 for this deal. While that might seem like a fair trade, the terms of the loan are steep. Over the course of a 25-year repayment period, Henry's £100,000 loan could grow to £250,000 due to the interest compounded yearly. That's a hefty price for Henry's future, and it's all based on the sale of that loan. But it's not just commission. Agents might also get rewards for securing customers who opt for particular products or lenders, often pushing products with higher fees or worse terms because those products are more lucrative for the agent. While the agent may present these as special deals or exclusive offers, the truth is that many of these deals offer you fewer protections, higher interest rates, and ballooning debts that can quickly outpace the value of your home. It's important to understand that not all equity release agents are created equal. While some are scrupulously honest and fully transparent, others can be far less forthcoming about the risks. The sales process can sometimes feel more like a high-pressure sales pitch, designed to get you to act quickly and without full consideration of the long-term consequences. They may not always disclose the full cost of these products, especially when it comes to compound interest, or make clear how much of your property's value you could lose over time. According to recent data from the Equity Release Council, the average customer taking out equity release is 70 years old, and the average loan size is £75,000. However, the interest on these loans compounds at a rate of 5 to 6% per year, which means by the time the loan is due, usually when the homeowner passes away or moves into long-term care, their debt could have doubled or tripled in size. Now, this isn't just about the agents themselves. The product design matters too. Lenders offering equity release are the ones profiting from the long-term debt build-up. Their interest rates may seem competitive initially, but because they compound, the total amount owed can skyrocket. It's not unusual for homeowners to owe far more than their house is worth by the time they pass on. The equity release agents may not always explain the full ramifications of this, making it crucial for you to ask the right questions and get independent financial advice before proceeding. Here's where it gets even more concerning. Many people, like Olivia, don't realise that their estate could be responsible for repaying this loan, including the accumulated interest. If the home sells for less than the total loan amount, it's not the lender's loss. Instead, Your loved ones, the beneficiaries of your estate, could end up with nothing after the loan is settled. This is a real risk, and yet some equity release agents downplay this possibility. It's critical to understand the full implications of releasing equity, especially how it can affect the inheritance left for your family. So let's break this down. What do you need to keep in mind when considering equity release? First, understand how the commissions and fees work. Second, be cautious of agents pushing loans with high fees and interest rates. Finally, and most importantly, always consult with an independent financial advisor. Don't let the excitement of quick access to money cloud your judgment. This is a financial decision with long-term consequences. We've seen it happen. Homeowners who've taken out equity release loans without realizing the full impact, only to find out years later that their home's value has dwindled and their estate is left with nothing. Don't let that be you. As we wrap up today's deep dive, remember this: the only person who should benefit from your home equity is you, and only if the deal is right. Stay informed, ask questions, and seek professional advice. Don't let your financial future be decided by someone else's commission check. If you found this information helpful, you'll love the next video we're working on. It's all about the dangers of interest roll-up and how to protect yourself from hidden traps in equity release. You don't want to miss it. And remember, this content is for educational purposes only. Mentioning any products or services is not an endorsement. Always consult a certified financial professional for personalized guidance. What's your biggest concern when it comes to equity release? Let me know in the comments, and I'll respond to as many as I can.